In this video, we're going to have a look at TRB token because there's a lot of price movement, even though this token is pretty unknown, and people are wondering whether this is some kind of market manipulation, what's happening, and so on. So my thinking here, my take here is that there's a lot of short squeezing, and there are different market makers at play here doing different stuff, and especially there's Andrei Grachev from DWF Labs. He's well spoken on Twitter, Andrei Grachev, and he was mentioned on a couple of podcasts I was listening to about what's possible with perps, and he's definitely good at his game together with other people. There's a great thread from him, so I'm going to link that below. However, what I want to look at in this video is basically different trading volumes and how you can spot for example, tokens like that. Basically, Andrei on Twitter was alluding to TRB token a couple of days ago, before this whole price movement started to happen, by looking at the funding rates. And if you look at the funding rates, so here we are on OKX, one of the top exchanges. You can have this data when you go to market. And when you go to markets arbitrage, you can go for arbitrage data. But this is available on all the exchanges, also on CoinGecko, so I'm going to show you as well. But for example, on OKX, you can basically filter by current funding rate, and you're going to see the tokens. If the value is negative, it means that more people are shorting than longing, and basically people who are shorting need to pay the people who hold the long contracts because there are so many shorters. Usually this value is pretty low, especially as you can see for the positive value right now, it's just slightly above zero, the top one. However, with TRB, it's still 1.5%, which is super huge. It was up to minus 3% at some point, and this is what was meant by basically short squeezing a couple of times, because there were so many short sellers that if you could move the price a little bit, there were a lot of liquidations and the price would move even up, and it happened multiple times over the past days because there were so many short sellers. And on the other hand, you have a whale or a group of whales that managed to push the price much higher. So this is basically what started to happen with TRB, and this is what happens from time to time on smaller coins in crypto as well. And this is only normal because those markets, especially in a bear market and for smaller coins, are much smaller and easier to influence. So this is the case of TRB, and we can also see that at the numbers. So for example, if we go to CoinGecko, then basically you can have a look at the market cap being $80 million, but the trading volume for the past 24 hours is $74 million. So this is huge. This is basically the same trading volume as the market cap, which means that basically every token changed hands within the last 24 hours. And also there's a huge volume on the open interest. So you can see the open interest. So you can see the volume, basically the top of the volume being on Binance, but there's also a lot of volume on BitGet, Bitvavo, and OKX. Those are the top four here. But this is on spot. We have also perps, and this is where the action is coming to, because basically on perps, you can see those crazy funding rates and how much open interest there are. Open interest basically means that this is the total value of derivative contracts, be that shorting or longing. So this is both longing and both shorting, and we have 77 million of open interest, which is extreme because 77 million of open interest is basically the market cap of the entire token. So that's already telling that people are playing more on the perp side than on the spot side, which means that there's some kind of action on the perp side, which also leads to another strategy that I want to get much into. But basically you sometimes can leverage the fact that there's a spread between the spot price and the perp side, and basically you can buy on spot, short on perp if there's the correct correlation, and basically profit from that. But also what you're seeing here is that there's immense volume on perps. Basically you have $1 billion of the 24-hour volume, which means that all the action is actually on perps, and what you're seeing on spot is like the small part of it. On top of that, the derivative part is actually much bigger than the spot side. Here you have, again, the total market cap is $80 million, but the total 24-hour volume just from Binance on futures is $1 billion, which is of course 12 times bigger than the spot side. So this is something you're seeing often on the traditional finance markets, the derivative market being much larger than the spot market, and this is also something we're seeing in the crypto market. So from my perspective, this might look like a healthy behavior looking at the conditions of the market, because you should expect that there are market makers that need to deploy capital, that need to actually do some kind of actions on the tokens, and there's not so many to choose from. So if you go below the first 100 tokens, then you find tokens like TRB or other tokens, and you can start playing there. And market makers are basically the people that provide the capital and or in order to for exchanges to show that they have the volume, they are actually making moves, and not for everything to be dead flat all the time long. Super interesting stuff. I'm not definitely on the market making side, but definitely if you're interested in that, have a look at what Andrei Grachev is writing on Twitter, because he has like great takes on that. Of course, on the other side, you have Wintermute, another market maker in crypto who's basically on the other side and also doing very interesting stuff. And there's the whole world of different market makers who are doing stuff like that. This is something different than crypto trading. So this is not something you should try as a retail, but you can probably profit sometimes if you learn to rate the funding rates, if you learn to rate when the potential short squeeze might happen to profit for a potential long. I'm not going to touch it here. What you would really need is basically a little bit of intuition plus calculation of what's happening and understanding of the situation. It's definitely for advanced players in this game, and I'm not trying to give you any advice here, especially on financial sense. So purely education, but there's definitely something here if you want to dig much deeper. Thank you for watching. Let me know what you think, and see you in the next video.